song, but also the topic of our next PE panel. Really, it's not all about the US, not about France and Germany too, but private equity is a journey around the world. We'll touch on Europe, touch on Asia, and a little bit of Latin America too. Welcome my two treasured guests. It's M.Tavakolian from Quilvest, the Argentinian-originated family office cum fund of fund PE and real estate investor. Welcome, Mark. Great to have you with us.
Thank you, Thomas.
And on the Asian side, we very much welcome S.Morkoetter from the HSG campus in Singapore to really provide us with the Asian perspective here. Welcome, Stefan.
Thank you, Thomas. Looking forward to our discussion.
Thank you so much. So looking from the global and PE perspective, what were maybe the main challenges that we were facing on a global scale in terms of accommodating to the C19 environment? Maybe Stefan, you could start with that.
I mean, if you look back the last 15 months and you kind of group a little bit, if I group my answer a little bit, I mean, you have deal sourcing, investments, exits, and fundraising. And I think for the investments, we clearly see two phases of 2020. First 6 months, with very little deal activity, and then of course the second half picked up, and then we closed the end 2020 almost on a comparable level as 2019. Exits comparable. I have the feeling, I'm a professor of finance, I talk a lot to private equity funds and investors. And if I raise the topic of exits, I see a lot of smiling faces on the GP side, so that they like the high valuations they are getting, and they stop smiling when they then have to explain why they invest at high valuation levels. So this is a little bit, I think, the challenge there. Fundraising a bit more challenging. We saw that I think overall fundraising volumes dropped last year, and this is of course then the big question for 2021. Maybe we see a recovery there regarding the fundraising. And you know all, of course, the discussions. We also have the conference today on a digital format. So fundraising much more challenging if you cannot travel.
Yeah, that's true. And then it was interesting, Stefan, because back in our VC panel this morning, everyone said, that fundraising was pretty much easier because, you don't have to travel, and digital subscription tools are gaining some traction. So it really depends on whether you're seasoned fourth generation GP, maybe then maybe some things become easier too. So how does it play out for Quilvest in terms of fundraising, maybe in terms of exit, Mark? What was your impression maybe for the first quarter of this year?
Well, I can say that last year, Stefan said, we saw that fundraising was definitely impeded by the challenges posed by COVID. But this year, the first quarter, we can definitely feel that demand is back. Demand is strong. Clients have cash and desire, perhaps more than before, to allocate to private markets. So it seems that this is going to be, if everything goes forward as we have seen so far, without any surprises out there, that in terms of fundraising in general, it should be a good year. Definitely, I mean, better than last year, which is not going to be difficult, but we should be reaching 2019 levels in Europe. That's where I have the most data at my disposal. I wouldn't be able to say the same for the US or Asia, but for Europe, I think we should be expecting 2019 levels again.
Yeah, and it's pretty difficult because you can talk a lot about bubbles and inflation, but you have to go for the active assets. And with the bonds, and in this environment, you cannot increase interest rates for many years to come, maybe. So it will be a continuing checking of bubbles, and then again, not really having a total new alternative. Stefan, we come to your educational background in a minute, but let's stick to private equity in Singapore in particular. I mean, if we look at the global LP landscape, there are a lot of very active, very sophisticated LPs originating from Singapore, like Temasek Holdings or GIC Private then, which are early pioneers of co-investments, for example. Do you have a little bit of historic background, how that evolved, and whether you see any developments there? I mean, you educate some of them too, so are an insider, Stefan.
I mean, you're right. I mean, we are in Singapore. Some also refer to us as the little red dot in Southeast Asia, city-state with close to 6 million people. And what you need to know, the country is very young, 55 years it is old, so turning 56. And within this 50 years, they managed to develop the country from third world to first world. And GIC and Temasek, in this sense, are of course very seasoned investors. Temasek started as being the holding owned by the government for the government-linked companies. And then this was the starting base to also go on to an international expansion tree and invest overseas and also commit to private equity funds as they nowadays do. GIC, of course, is managing the foreign reserves of Singapore and therefore has a slightly different mandate, that they are less involved internally in terms of developing companies within Singapore. What we see, if we take a look, for example, at Temasek, they were very active also GIC in investing in local venture capital or VC-backed companies, supporting, of course, the development a bit of Singapore. If you compare a little bit Asia with Europe, then I always make the reference and say we have Switzerland, a bit more the LP base, less GPs. And then if you go, for example, to London or Frankfurt, then we have, or Munich, of course, then you have more the GP base. And until 2 or 3 years ago, I think it was the same for Asia, that we have Singapore, strong LP base. There's a lot of LPs there. And then if you go to Hong Kong or to China, you see the GPs. Within Southeast Asia, clearly Singapore is the hub also for the GPs in terms of location where the majority of the GPs is located. And really interesting topic is we see, of course, a lot of VC funds or generalists being active in the whole of Asia, not only Southeast Asia, but we also see starting funds, first-time funds being raised for mid-market or small cap funds. And I think this is a very interesting and new development because it also shows that targets are there so that SMEs can be acquired, or at least you get a minority stake there. And you not only have the VC topic, which of course is a dominating one in Asia. And I think Mark will agree on it that as an LP, you cannot avoid, of course, and you don't want to avoid the VC funds in Asia.
Right. It's interesting that you refer to that you do a comparison, between Switzerland and Singapore. I think most of the funds structurally are still run China, Singapore, so the Cayman Islands. And when it comes to Switzerland, you say it's more an LP base than a GP base. I must say, if you look at FINMA and the Swiss funds that are available, you just wouldn't do it there because of that, right? Because decidedly, they say, we learned a private banking lesson and now we have kind of a harsh regime. And so currently you wouldn't probably consider a lot the Swiss fund structures, to be honest. I mean, that's clear, and that's a dedicated decision. Mark, looking at the Bamberg family that is behind Quilvest, and as we touch a little bit historic roots here, could you give us a little bit of insight? How did that evolve in Argentina, and how did the Bamberg family get involved with private equity, maybe venture capital?
Well, the family history started in 1850. So 170 years ago, when Otto Bamberg, the founding father of the family, emigrated from Cologne to Buenos Aires. And I'll try to be brief here. So he started building a first capital by importing and exporting, sending agricultural commodities to Europe. And with the revenues that he generates with the sale, he purchased fabrics in France, which he then imported to South America. So that's where he started. And he sent his son to the Technical University in Munich to study I'm sorry, I don't know the term, but to become a beer brewer, there must be a technical term for this sort of field of study at the TU in Munich.
At Freien Stefan, right? That's their part of their faculty. I don't know, Braumeister. I don't know whether it's engineer. Yes, something like that. Yeah.
In all cases, father and son then founded the beer brewery Quilvest in 1888 in Buenos Aires, which subsequently became one of the most popular beers until today in Latin America. And this enabled the family to accumulate a little bit of wealth, which then during the course of the First World War, or towards the end of the First World War, was invested in France by purchasing a real estate portfolio in a very good location in Paris, where we are based today. So that was one of the first real estate investments that the family has done. And since then, the family's wealth has been managed from Paris as the main hub. And over the years, real estate investments have been done. Obviously, equities have been purchased. And in the 70s, I will try to be brief, when the first private equity funds came to family offices for the first round of funding, because it was an emerging and nascent asset class, they knocked also on the Bamberg's or Quilvest's door. And being entrepreneur and risk takers by nature, they have started writing the first checks in the 70s, and then until then never looked back and started investing with other firms, spin-offs, re-ups, and started doing co-investments. And when we saw that they are also adding a lot of value, we try to take minority stakes in companies directly. And after having had positive experience on that front as well, we started taking majority stakes in small and medium enterprises. So we became a buyout investor, direct investor, and then more or less 20 years ago, we opened the platform for other families and some institutional investors as well, who started co-investing with us. So it's for 20 years now that Quilvest Capital Partners invests always family money, but also money of third parties.
Great. So talking about families investing money, Stefan, let's look at it the other way around. Are Swiss family offices, I mean, you educate parts of them, willing to invest into Asian private equity too? I mean, there are dedicated Asian funds like Walden and the VC space around for some years now. Is that becoming a larger area of activity for Swiss families, Swiss family offices?
Thanks for the question, Thomas. I think if you take a look at the LP portfolios of European LPs in general, we still see large home buyers. We recently did a research project where we looked at the LP portfolios around the world and tried to see whether or not the home buyers is still in place. And we see a strong home buyers for the US, but we also see it for Europe. So in general, LPs, also family offices, prefer to invest in their home market region. I think there are various reasons for it. You have the network and so on. But we, of course, see that over the years, the private equity scene was developing in Asia, in Latin America, and all the other places. So the question we ask ourselves for this research project, do we see a shift? So we still see a strong home buyers in terms of that you invest where you're actually located and pick the GPs there. Maybe then some GPs have worldwide programs. This is okay. But you try to overweight actually the local GPs. What we see in Asia is that we see family offices from Switzerland or Europe in general coming for VC investments or VC funds backing them, so less co-investments. And I think a rather new trend and movement is that we see family offices moving to Singapore, setting up their offices there, not with a lot of noise, but when you know the names from Europe, then of course you know them. And we see that the next generation is coming, so that the younger generation are discovering Asia in that sense, and they are looking for investments, co-investments. So this is a little bit what we see. and that they start to kind of look and source for deals, also infrastructure deals, or take a prawn farm in somewhere in Southeast Asia. So this is what we more and more see, that the peoples are coming up, setting up an office. So I think it's really a trend going beyond the fund investment, but really also acquiring local skills when it comes to investing into private equity in Asia.
I think I strongly believe that, because I mean, just starting with Singapore's overall educational background and its excellence in the mint space, you really have a solid basis to start with. And apparently the stable system in the area, being kind of the Switzerland of that region, catering to many countries and friendly trade relationship, I think that's really makes it apparently hugely attractive. So, Mark, let's come back to the family office again. You really gave us the picture of sort of a merchant banker, which is always a global background for many PEGP and VCGP. What is so particularly interesting for families and family offices when it comes to the private equity asset class? I mean, when you are in the fundraising process right now, where do you see more and more openness? So maybe you can give us the special points of the family offices, but then if you analyze your current base of LPs in your funds that team up with your other maybe pension funds too, or do you really go 100% for other families?
Well, I think based on the DNA of our firm, we tend to have families with similar mindsets joining us in our, be it investments or fund programs or buyout programs, or even real estate when we do real estate together. We're joined by, for lack of a better term, by a similar DNA, because many family offices have built their wealth through being entrepreneurs or in that industrial activities, especially in Europe. We do not have so many families with new money, without this being something bad. But in the US, obviously, we have a lot of tech millionaires, billionaires. We do tend to have less of them in old Europe, for lack of a better term. So those families, and I think this is not news to anybody here, they understand the concept of building a successful enterprise and what it takes in order to keep it going through cycles and over generations. And since we seem to have mastered that on our family side, because when you have a brewery in Argentina, that means you have been through 9 sovereign defaults of Argentina. You have been also through 2 world wars, like everybody. You have been through all the financial crises. You have been through a nationalization of your assets during the time of the dictatorship in Argentina. So you have been through a lot. And this gives you the strength as well to be an entrepreneur going forward, because you are ready to meet challenges. And this is our DNA. And I think this is shared by many European single family offices or high net worth individuals who have come the same way and have, through hardship and a lot of hard work, accumulated a little bit of wealth, which they now would like to preserve and perhaps grow in a way they understand, and in a way where they feel that the people who are in charge of growing these assets through private investment have a sense of where the money is coming from and how it should work in order to be preserved or hopefully increase.
I disagree, and again, playing on tomorrow's VC panel, in the prep session, you know, some time ago, we talked with Hendrik Brandis of Early Bird, who did the UiPath transaction, maybe the most successful VC for a lot of decades to come. And he said, you know, remember the bad times when you started out, who really saved you? And he said, you know, it was only about family offices and their money. Others would have killed us, you know, because just from the organizational setup, they couldn't be so customized and so analyzing of our of our approach that they would stick with us. Whereas, you have a family, they say, you promised to make me money this year. Now I have to pay double of it. But I trust you. I understand what you are doing. I stay put. And then the success stories always grow from there when everybody praises them. No one's interested in that as a real entrepreneur. So that's interesting. Stefan, it's about education after all. I mentioned, when you look at the PISA studies and stuff like that, Singapore always comes out in top spot based on its educational system. Is there a lesson to learn for Switzerland, for Europe altogether from this approach? Are we weak in natural sciences? Should we really foster initiatives to better education there? Or do you think it's a cultural difference that we could live with?
As I already shared with you, the starting point of Singapore 55 years ago was emerging market. And at that point of time, when they became independent and started on their own, they could not rely on any resources. They have no oil to sell, nothing. So what they have is the skill of the people. So from the beginning, there was a strong focus in Singapore to educate their own people, because only if you have educated people, you will attract businesses to come to build factories and so on. And you really see it also when you look in the history of Singapore, that they continuously scaled up their labor force, and therefore also attracting more complicated products to be produced within Singapore, and also the whole business service sector. This in turn allowed, of course, the companies coming to pay higher salaries. People are more productive, you have higher salaries. So this was developing, of course, the economy of the country. And nowadays, Singapore is one of the highest GDPs per capita in Asia. Having said that, right now, and you ask us a little bit about entrepreneurship and how it's fostering. The last 5-10 years, we see really a strong push into the startup industry in Singapore. And this is, of course, kind of then supporting a bit the mindset that we see more and more also role models of Singaporeans setting up their own companies. This also closes a bit the loop to GIC, to Temasek, supporting some of these tech companies within the region. So I would not compare Switzerland or Europe with Singapore, but really kind of looking at the specific situation we currently have in Singapore, and where we see a little bit more of a focus now on innovation to come up with new ideas and to develop also your own agenda in that sense. So Singapore traditionally, of course, is the gateway to Southeast Asia for many businesses, and we have them located there, but also increasingly we see a strong push regarding and support also in terms of financial support for startups in Singapore.
Right. Let's get back to private equity as a core investment market. If you look at your recent fundraising or future projects in that area, what niches, what specific strategies would you be looking at to offer your family office investors in the area of private equity?
Well, we are per se not looking for niches as in terms of sectors. What we have always been focused and specialized on was what we call the lower middle market or small medium enterprises. So we think our value, our added value is in this environment where we understand how companies work. Sometimes they're often owner-led companies in various sectors that we like. We don't go into every sector. So I wouldn't be able to tell you we definitely want to do healthcare in India tomorrow or this year or going forward. We have a different approach. We want to be in the sector that we like, small and medium companies, because historically in terms of returns, and perhaps Stefan can back this up with numbers, what we've seen is that this market segment outperforms the large or mega buyouts by 2% of IRR. At least these are the numbers I had seen recently, and that was over the last 20 years. So this is where we are comfortable. This is where we have our own experiences, our good ones, our bad ones. And we keep looking at Europe and the US, especially the US, which will remain in terms of private equity for a long time the largest and deepest market with the most opportunities, especially in this sector. We like Europe obviously as well, but and increasingly Asia. Coming back to what has been said before, we have been active there for 15 years and deployed more than $1 billion of family plus friends and families money, and this certainly will not become less. Our Asia portion, but I wouldn't be able to tell you a specific sector. We like to go with good partners, good GPs that share our values, our DNA, and we have done this well so far. We don't do every deal. We're very selective, but it has served us really well. And when we say Asia, for us, well, perhaps that helps you a little bit. I mean, it's also, again, not big news, but it's, I'd say 70% we're looking at China, 20% India, increasingly India though. So this is really perhaps a region where I can say, yes, we have an extra eye on. And the remainder is, well, the rest of Asia, but it's very, well, there are few opportunities, at least that we see and that we like in that particular port, which is not China, not India.
Well, that's, I'm sorry, that's interesting with regard to India. And I want to stress one thing. You said, well, it's more about first the sector of SMEs that we invest in because they garner higher returns per se. And it's about, the company really, who's running the company. And maybe a final learning from tomorrow's VC panel. It was again, Henrik Brandis, who said, when I look at all our top exits, the stars, right? 100% of them still had the same CEO that when we invested in initially, 100%. He has a portfolio of 25 years plus to track, right? That was very interesting. So I guess it's about markets, but markets change. Sometimes you really have a portfolio company you invest in for a certain market to be catered to, and you end up 7 years later with a totally different business model, but still with the same captain. Not sailing the ship. I think that's a pretty interesting observation. So maybe Stefan, I mean, you of course have a Singapore, Switzerland bias, talking about bias. And to add one thing, a bias in the area of private equity is partly not that bad as maybe in overall equity portfolios, because it's all about knowledge, I would say. Stefan, do you have any particular, I mean, it's our around the world portfolio that became more interesting recently within your research, certain areas of the globe that are really not classic PE jurisdictions? Anything you would like to add?
I have to admit that following up on the LP home bias, I also have a home bias in the sense that I am, of course, very positive regarding Southeast Asia. And following up a bit what Mark said, I know China is a big market. Of course, we know all the figures there. But in Southeast Asia, we have more than 500 million people living. And we see big trends upcoming like urbanization. So if simply people moving into the cities there, then obviously this will trigger a lot of investments. We see it also on the stock exchange that capital is being raised. So I'm following on your question, Thomas. I'm quite optimistic regarding.
That's very good. Maybe the audience shares yours and our understanding, because here we have our panel question coming up. Name your top emerging VC markets that should generate the highest across the board IRRs over the next 3 years. Would that be Asia as a whole? Would it be Latin America or even Africa? The potential is there. Will it now be tapped on? Curious to know. Towards the end of our panel, we will have the answers. And that should be quite interesting. Stefan, looking at the composition of your Singapore campus students, what are actually the financial services and banking sectors that you cater most to in terms of student composition? And has this changed over the last 5 or 10 years?
I have to admit that we have an institute. So what we do in Singapore is a bit different from other business schools, which is we are in Asia, in Singapore, for our students and our faculty to learn in terms of teaching and research. So we have all the students coming from Switzerland on the undergrad and the master level, and they stay with us between 1 week and 4 months. So that I always say that we open the eyes for Asia, for the young people, that they see what's happening there. So we do not have direct intake of Singaporean students, but we have high interactions also with our partner universities in Singapore. And there we see, of course, the banking and the finance industry quite important and still important. And we, of course, have then the normal services, the whole sector there, the headquarters, which are quite important for Singapore and the consulting company. So yes, you see it. But I think it's comparable if I talk to my colleague in Europe, that the young generation wants to work for the startups. This has become very attractive, of course, for them. And I more hear that it's challenging for the established ones to also attract them, which I think is good, because competition is always a good thing. But there I see a bit comparable situation also when we look at Europe, where the younger people, the generations or graduates are focused to which companies they want to join.
Mm-hmm. And it's no surprise, I guess, that the young at heart and the younger students from Switzerland coming over for the Asian stint really have a focus on venture capital. And it's a really good thing, you know. We talked about US this morning with Babson College, really having a graduate school totally focusing on entrepreneurship, the Kaufman Foundation fellowships really fostering entrepreneurial talent in the US, and even, you know, in Switzerland, in Europe altogether. There's nothing really comparable. You have great business schools, but no one would say, you know, I'm not here for the large companies and organizations. I'm just here for the entrepreneur, the one who starts out alone, and how I can be supportive and bringing his idea to fruition. So maybe there's an initiative yet to come, really to focus academic education more on that. And we have our poll results here, and very much to our serving our discussion. 70% say, well, it'd be probably about Asia that generates the highest returns in the private equity space over the next year. Around 20% say it would be Latin America, but sadly, you know, it's changed. It changed. I was wrong. So it's a tie, I guess, for Latin America and Africa. That's a bit more problem. And there are some, you know, dedicated funds there, like Helios, and then some ones fed by UK investment banks, Standard Chartered, and so forth. So hopefully we will see more from Africa. Allianz, you know, I don't do any advertising or affiliation, but they have launched an Africa fund, and many other shops do that as well. What about your experience? Have you ever considered investing with an African operative company, Mark, or is there something that you're just not specializing in terms of your team? What is your take on Africa, maybe?
Well, I would love to give you a take, but as you correctly guessed, it hasn't been on our radar. There are probably tremendous opportunities, but we like to stick to the regions that we know, and Africa is not one of them, unfortunately. And perhaps I can add to that we tend to prefer buyout, which is a very late stage, obviously. And I assume, really, I'm guessing here, not being any specialist on Africa or African markets, but I would assume that you'd see perhaps a lot of companies or opportunities in the earlier stages. I'm guessing here. It's perhaps something I also deduct from our experience in China, where you find percentage speaking, less mature companies as you would find in Europe or in the US, given the fact that the economy has been growing so rapidly, developing so rapidly only for 20 plus years. And I could guess that it's perhaps similar in Africa, but I would be the wrong person to say anything more than what I have just said. So sorry.
So then, clearly what we would do for the next panel is have an Africa expert here on the ground to teach us a lesson about it. Stefan, in terms of research projects maybe, or any other exposure, could you add something to the Africa experience here maybe?
I have to follow up what Mark said. I am really not an expert on the African PE market. Definitely, it is an interesting one, but I would agree with Mark saying that buyouts are probably in the later stage. This is also what we see in Asia, in the setup that we see, of course, minority investments, and now slowly in mid-market, small cap fund market is growing. So it's really early stage there. And I think this is a blessing of being in an emerging market, in the sense that you see a lot of growth. And if you have a lot of growth, the existing business owners do not want to sell their business. And they only want to take in minority stakes because they want to have the capital and maybe the expertise to grow even faster. And I think this is a little bit the challenge. The more mature the economies are, this is what we see also in Southeast Asia, the more buyout opportunities are coming up. And I like what Mark said, saying when you describe the background of your family, which you're affiliated to the family office, then of course you see it, that it takes generations. And I'm pretty sure that obviously with more mature businesses, we will also see more buyout activities in emerging markets. And this is of course interesting, because if I have a business which is growing at 25% every year, and I do not want to retire, then there's no reason for me to sell the business. And the only reason is to accept the minority stakeholder if I get more capital, because then I can even go at a quicker space. And this is what we see in emerging markets. So I would agree a little bit what Mark said, but I'm really not an expert on the African market.
So clearly we'll have an African Expo next year in Munich on 28th of April 2022 at the Bayerischer Hof. Maybe I can invite the two of you, again, maybe Stefan through the screen, but Mark being with us on the ground if he likes to. I mean, Mark, no Oktoberfest for us this year, as we learned yesterday, right? But as a precaution.
I just canceled my hotel reservation this morning, unfortunately.
Yes, but it's very difficult. I mean, we want to open up restaurants and hotels, but an Oktoberfest is another animal. Very sad for our friends in Munich, apparently. Okay, so we wave a little hand to Inna Gerd here, who should have been with us but had to drop out due to a last-minute meeting. Could deliver a better picture on the Chinese market, mainland Chinese market, because MCP Mandarin, her fund, I think fourth generation by now, is catering to then Italian and German brands that want to enter the Asian market with a particular focus on China, but on Japan, South Korea as well. Maybe Inna will join us too. Yeah. So, well, any continent that we have left untouched for the last 2 minutes would be Australia. Why not? Why not spending a minute on Australia? It's famous for some interesting buyout franchise like Champ and so forth too, I guess, who have generated great returns. And then it's about the Aussie Supers, you know, the pension funds from Australia, who have always been very entrepreneurial, which play a huge role in terms of LPs globally too. Then Asia, we had a lot. Good old Europe, you know, is progressing in terms of generating higher VC returns, is becoming more attractive for US endowments too. That was a rare animal, US endowment in a German fund, in a Swiss fund. But you see more and more getting interested, more and more of taking a little chair. So I think, is private equity, Mark, becoming more international effectively? You know, the old America, UK, and then my own country play, is that more multi?
I think
Thomas left us.
the question is now, has the audience left as well?
Okay. So I think, Mark, it's for us to wrap it up a bit, since Thomas, our moderator, left the discussion. I think his final question was that, do you see it becoming more international in terms of that you collaborate also together when you reach out? I mean, you said China. How did you move to China? How did you explore there your network in the end? But you of course need to invest.
Well, it was a conscious decision by the family and by the investment team more than 15 years ago to take part in the nascent market, because we saw GPs that we have known and invested with for many years that branched out, and other LPs or co-LPs that started looking into that direction. You know, our US partners, our UK partners, and on the GP and LP side, as we are both, we also tend to exchange with both type of investors. And we saw them looking over towards China, and we started doing the same, and we built a little office, because when we do something, we want to be on the ground. And we just started very small, again, organically, like everything's in our firm. It started with some thinking and then some doing, and then today we are extremely happy to have this experience on the ground, 15 years, because you can't buy that so easily. And we have seen already some cycles in that area, as you know. So, and we're really happy and looking forward to many, as you say, and I think we agree with you, and your bullish view on the region. So certainly currently the most dynamic part of the world in terms of PE.
Gentlemen, thank you for filling up while Thomas is off. We are the technical organization team. He's had a connection problem and he's back. He's back.
I don't know. I have a
Anyway,
problem, but
it will be time to wrap up very soon. So welcome back, Thomas.
Yeah. No, thank you. I don't know what happened, but I'm back in. But basically, we were fine. We had a little journey around the world, as promised. So I thank you, my two guests, M.Tavakolian of Quilvest Capital Partners, S.Morkoetter, HSC Singapore campus, for doing the journey around the world with me, with us, with our guests. Very interesting. So let's do it as a in-person journey again next year. Maybe Stefan, you have a chance to join us via the screen. In any case, let's get back to global issues then. Thank you for joining us, and have a great rest of the day. Goodbye.
Thank you for having us.
Thanks for having us.